can't seem to close the gap between buyers and sellers. What a rumble in the jungle it's been. I don't know if anybody else is having that problem, but just nobody wants to pay any juice at all for anything. At least with the people I'm contacting.
On point, yeah.
You know.
Are you that observation, is that for the commercial or resi?
That's going to be for multifamily over 10 units. You know, 10 to 50 to 100. I mean, it's not that I'm pitching a lot of 100 units. And then, you know, even in the hospitality zone, we've got a couple hotels in Orange County and in Florida, and they're not necessarily distressed or performing that poorly, and the pricing disparity between what people are willing to pay and what they want to sell for is just not there. I mean, it's a big disparity, and it's a challenge. I'm not bitching and complaining. I'm just giving you some feedback.
No, I'm with you, and you know, it does reflects also in the residential world. By the way, currently, the gap between the appraised value, or the true value of the property, and what it's being asked, even if it's not being, you know, even if they don't ask for that value, if it drives to that value, or it's a bit different in commercial, right? It's a crazy town for sure. But I think right now the game is to try to capitalize on what is the maximum dollar amount they can get on their properties.
And also, Manny, one other thing is the replacement cost. It has changed because of the rise of the cost of the material. So I mean,
Agreed.
there's a lot of things going on right now. It's not just there's a lot of things that are driving up the prices.
Yeah, on point for sure. Again, people don't take it into consideration, or they do. Who knows? I mean, it also depends. I think what is the strategy as a buyer investor in this market, right? If you're looking to purchase something and not for the flip sake of it, just to keep it for X amount of years ahead, it's going to keep appreciating as well. So you know, you will take it into consideration. It's part of the risk. But if the value that you pay plus the replacement cost, etc., is greater than what you can recoup in X amount of years, I don't know. That's why it's also always good to deal with 1031 exchange clients, right? Or find those, you know, those professionals out there, if it's companies or individuals that specialize in exchange, that will, you know, they have the client that's looking for the product. They just need to park their money wherever it is. Not that they're going to compromise, but sometimes you have to place the money in a very specific period of time, and that can make sense if you follow me. Any other feedback? Any other insight? Anybody? And I see that Orlando join us. Orlando, I cannot see you yet. Can you? Oh, there you are. And just let's get you unmuted.
Manny, I have a question for the group. And
yes, Albert.
Sure. I was just wondering if anybody knows what's the latest on talking about 1031. I have heard that they're gonna cap it at 500,000. And does anybody know anything about that? What's the possibilities? And what's happening? The latest? Any feedbacks?
I'm not sure on my end, to be honest with you. Anybody here has any kind of feedback? If not, we'll see. You know, we can wait for a minute. I'm gonna have more people join the call. Maybe you can ask it kind of the second half of the meeting. But good question, Albert. And maybe it's time to bring.
Hey, Albert. Hey, Albert. It's Jason. I don't quite understand your question. They're capping what at 500,000?
They're capping the maximum exchange that you can do. Let's say you want to exchange a property of 5 million to 7 million. You can only pay not taxes and exchange up to $500,000. the balance of $1.5 million is taxable based on the new tax propositions from the new administration. That's what I've heard.
I'm going to call Phil Antoine right now while I'm waiting. I'm going to find out. I haven't heard anything.
Yeah, I've heard the same. Definitely news is out there, but nobody can say at this point what's going to happen, right? That's what the position is.
No, I'm just wondering if anybody knows a little bit more than me about it. That's all. Just wondering.
Okay, good question, Albert. Thank you.
Question.
Sam, yeah, go ahead, Sam.
Playing devil's advocate. Let's say this happens tomorrow. What's going to happen to the market?
It's going to be more chaotic probably for a while.
I mean, chaotic, or it would be lower inventory.
Take your pick. Who knows? Who knows what will happen?
I mean, maybe if they say that it will go effect next year, then there's going to be a lot of inventory this year because people want to cash out, and maybe that will cause the chaos, the rush to sell. Maybe.
Right, maybe. And I've heard if it happens, probably it's going to happen in January of 22 and on. So
exactly, that's what I'm saying. If let's say this thing passes, then you're gonna have a lot of inventory this year because people are gonna rush to sell, so they don't have to pay two things. One is the next year's capital gains tax, and obviously, if they want to upleg, this is the time to do it. It could actually be good for us as real estate agents.
Yeah, that's why you always want to find the how to connect the two
Silver
dots.
lining.
Right, exactly. Yeah.
Silver lining. Yeah.
So
this could be a silver lining.
So let me present our guest speaker for today. Maybe he can put some pieces together, Orlando, with the Premier America Credit Union, and you're asking yourself, credit union in commercial meeting, what is that? I had the pleasure to meet Orlando. I mean, actually, we know each other for quite some time, but I got to meet him recently with the David Yashar's group dinner, socially distant dinner, and we got to connect and chat. And he have really some good insight and some good things that he's doing and his group are doing. And I thought it can be very beneficial to bring him to our chat, to our call, and share some insight. Orlando, good to have you.
Thank you. It's good to be here, Manny and everyone. It's good to meet everyone. I wanted to spend a few minutes with you guys, just do an introduction, let you know how I can be a resource and when's a good time for us to talk. So as Manny mentioned, I work for Premier America Credit Union. And what a credit union is, it's just a nonprofit bank. So we're not owned by shareholders, we're actually owned by our members. There's a lot of credit unions out there. There's maybe about 2,000 in our country. There's just some that are bigger and open to the public, like us. You don't have to be a teacher. You don't have to be a police officer or a firefighter to join us as a group. We pretty much help members all over the country. As long as you either live in the area or online, you just say, hey, I'd love to join the Thousand Oaks Cultural Arts Center for free. That makes you eligible to join. So I'm actually lending to people, not only both on residential and commercial, everywhere in the US. I pretty much do everywhere except Hawaii, Alaska, New York, just because they have a little bit tougher rules and laws out there. But as a credit union, we do car loans, residential mortgages, commercial mortgages throughout the country. What makes us unique is that we're actually lending all that money that the members deposit, because we've been around since the 1950s, the 1930s. So our core base of customers is not like your B of A, your Chases. These are clients that joined us years ago through working through their employer and have now had generations of customers that bank with us and are loyal to us. So those members deposit money with us and we lend it out. So we're actually a portfolio lender. We're lending our own money. We're not selling it to Fannie Mae. We're not selling it to Freddie Mac. So that's where I come in. I'm not here to be anyone's lender, like the primary lender, I don't think that would be good for any sales professional, because you guys have a good network of lenders and some that you trust and some that you call when you need them. So I think I'm that good fit, because credit unions don't have all the products out there for everyone. They really don't. They're not as built as big and as specialized for real estate professionals like us, like other outside lenders. But what I would say is where they specialize, we do things that are really outside the box. So if you have a client buying a commercial building or a 4-unit residential building, and maybe one of their tenants didn't pay last year, and they asked their current mortgage, hey, give me a break for 3 months, give me a forbearance. When they go and buy their next property or apply for their next mortgage, most lenders may say, no, you can't do that. Whereas that's when a credit union comes in and says, well, they still have X amount of assets. They still have a great credit score, great income. So we do things outside the box that Fannie Mae and other investors do because we can. We come from a place of service of how can we help this member, whether they're brand new, never been with us, or they've been a 15-year member, we treat them the same. We still try to take care of them. So let me give you an example. I probably did 400 loans last year. I declined 1. And she knew it was going to be a decline. She knew it was going to be tough. So where I come in to sell is I'm your client or your advocate to convince my boss, my VPs on why we should do the deal. So it's really, really nice. And it puts me in a unique position of being able to fill a hole in the market where other lenders can't do. And I could probably make more money working for myself, but I love staying with credit unions, not only because they can do things outside the box, but we don't charge more. If you're A paper, you're a perfect slam dunk loan, and I give you a 3.125 30-year fix. If you're outside the box, I'm gonna give you the same rate, the same closing costs. Either I do the deal or not. So that's a pretty cool approach to credit unions. And I currently work with a lot of commercial brokers because those same clients have a lot on the residential portfolio as well, a lot of times. And sometimes they come across DTI issues, where one of the things that I wanna share with you is for those clients that maybe write off a lot on their tax returns and have DTI issues, I'm one of the few lenders that can take their liquid assets and assets like equity in properties. So let's say they have 10 homes in Beverly Hills and they're refinancing a commercial building or refinancing a residential property. I can take the equity in those homes and count that as assets. Can you guys hear me okay?
Yes.
I'm sorry about that. I got an interruption. I could take that equity and the money in their stocks, the money in their retirements, and I divide that over 10 years and I count that as income. Now, I've never heard of a lender doing that. And it's kind of crazy that this credit union does it. And it's because we work with these brokers in Beverly Hills that's all their clients. They're very affluent, very outside the box. So they almost conditioned my underwriters and my managers to think outside the box. So if you look me up on LinkedIn, I've worked for the top banks, the top credit unions in this country, looking for who does the best. No one does. I mean, customers, clients will have a fit, have a niche according to that lender. But when you have a tough deal where it's a solid deal, they just don't fit the box. That's when someone like me comes in to help. So sorry for that long-winded story, but I just really wanted to be particular on ways I can help not only yourself, but even other lenders that are having a tough deal. They call me all the time and refer me business for that reason. So thank you, Manny, again for having me on.
Good,
Can
good
you
stuff.
share your
And I did put the your LinkedIn link in the chat so people can see it and connect. So a few questions for you before, and guys, feel free to type in the questions or you can ask in a second. First of all, 400 transactions last year. Congrats, by the way. That's one heck of a job. The majority of them, or if you can like break it down in percentages, what type of loans, the majority, or maybe the top 2 or 3 products that you dealt with?
So I would say, and I appreciate the kudos. Thank you. I think most of us lenders are really busy because of these rate drops. Our country has never seen rates in the low 3s or under 3s ever. And it started in March of last year. So you might find we're a little bit harder to get a hold of. That's why I urge agents, like, have your network of lenders out there, because one might be more available for you than others. But where all us lenders will say, I would say 80% of our portfolio is going to be the 30-year fix. That's the cookie cutter loan that we do. And they come to us because they trust us. It's a good rate. The fees are low. But the loans that are unique that people come to me are going to be the interest only. I'm really unique that I do interest only on residential, up to 70% of the value of the property. We do like 10-1 ARMs, like at 3% or at 3.3 for an investment property. So the interest only ARMs, we also are very popular, not because of the product, but because of a policy that we have. When you have clients who are accustomed to buying investment properties, a lot of them have to get loans in their own name, but for liabilities, for taxes, they want the title of the property to be in an LLC. It's really hard to find lenders that will give you a good rate and allow the vesting to the property in an LLC. I'm the one credit union I found that we do it, and I don't charge you more. It's just a little bit of extra work for our attorney to review the documents, the LLC, and approve it, but I do it. And the rates are just as good as if we were doing it to a personal name. So the loan's still going to be to the client's name, but the property and the note will also have the LLC. So those are our unique products, our ARMs, our interest only, and the vesting under LLC.
That's amazing. And by the way, Joe, did he answer your question regarding the rates on single family, etc.?
No. What are your rates on single family?
So for example, like a 30-year fixed single family is 3.125 with no points, or a 10-1 ARM, 2.875 with no points.
And what's your telephone number?
He's gonna put his information on the chat in a second, cell phone and email, etc.
The reason I'm asking is I've got a HELOC. I want to get rid of it, 4% interest. Did you?
Yeah, and that's a good point, Joe. A lot of, because I've been in the real estate world where I also network with a lot of other lenders, lenders that work at KW offices, other offices. And that's another reason they call me, is because the credit unions do the HELOCs, which are home equity line of credits.
Oh, no, I don't want a HELOC. I want to pay one off. It's 4% interest and it's too high.
Right, absolutely. So just wanted to share that with the group. That's another opportunity for you to look into not only my credit union, but credit unions out as a whole, because their HELOCs or home equity products are competitive, as well as the car loans, RV loans. We have a lot of clients because of COVID buying RVs. It's crazy. You can get an RV for 20-year fix at like 5.2%. So a lot of people have shifted that way in travel and even living lifestyles.
Do you have a cash out refi program as well in the union?
Yeah, so investment products, second homes, vacation homes, everything. The rate is just 1/8 more if you're doing cash out. So let's say a 30-year fix, you're doing cash out is just 3.25 versus 3.125. Pretty straightforward. Another thing that you guys may have of use, credit unions are particular with doing, since they're not selling to Fannie Mae, they can do loans from like, so Fannie Mae goes up to like 700,000 to like 1.2 million, or actually let's say 1 million. I can do 5% down. We have PMI, but the rate's competitive, the PMI is competitive. So someone buying up to $1 million property could put 5% down as their primary residence, or even up to 1.5 million with 10% down. So we compete a lot against the banks, the few banks like the Chases that offer similar products, but most other lenders don't offer because Fannie Mae doesn't have it. Again, it's our own money that we're offering. So that's for purchases, that's really competitive, up to $1 million.
Yeah, once again, you have your the strength of making your own rules to a certain extent.
Exactly.
What was the most complicated deal you had last year, or in general, that you can share with us?
That's a good question.
A lot of loan officers like myself, we're really great at what we do, and we have a lot of experience. But well, at least my friends and I, we have ADD. It's really hard for us to sit there and review these tax returns. Like I file my own taxes. I do my family's taxes, but to sit there and analyze the deal. So my most tough deal last year was the deal that had 7 businesses and 15 properties, which, by the way, most other lenders have a big issue to those investors that have more than 4 or even more than 10. we don't have to sell those loans to Fannie Mae, so I can do them and they're not more complicated or more expensive with me. But what I learned this year is that I was doing too much work. Instead of analyzing how much they made in their businesses and how much their gross rental income was on, because all of us investors, we make X in rent, but on our tax return, we show a lot of write-offs so that the rents are less, right? So we can pay less taxes. So how I would use that deal today, I wouldn't even use the tax return income. I wouldn't even use the rental income. I would just take what all their portfolio is worth, all the equity they have in those properties, divided by 10 years, and I'm done. That's their income, is the value of those assets divided by 10 years, which in a lot of times it's even more than me sitting there and giving them income for their business, income for their rentals, and then I have to go chase lease returns and proof of the deposits. So that's how I've turned my most complicated deal into now one of my easiest, and of course, lucrative deals.
That's impressive. So once again, just to the punchline, just to repeat what you just said. So you take the equity in the if it's a property or portfolio, etc., you divide by 10 years, and that's how you calculate basically how qualified the principal is.
Exactly. So the only thing we don't use is, let's say the client has a portfolio of 9 homes. I'm financing one of them. I'm just not going to use the equity in the home I'm financing. I'm doing the equity of the other homes that we're not touching, if that makes sense. So there's even been rare instances where we even use a client's, like last year I used a client who owns a jewelry store. He ran an invoice of what his store like inventory was worth. I use that as an asset because a lot of the guy had good income, but doesn't have a lot of savings because he's buying jewelry to resell it. So no lender that I know of would use that jewelry as an asset and include that as income. That's how I was able to make another deal work. So we try not to, right? That's a really worst case scenario. Equity in properties, it's easier to verify, it's easier to do. But even if we have to go outside of that, 2 years ago, we used art collection one time, because it's assets. And a lot of these affluent clients have those assets. They're just not liquid in stocks. They have other ways to show it.
That's very cool. It's very creative. And I guess, once again, as you mentioned earlier, that because you're working with specific type, or how it came about, you're working with specific type of clientele that requires that creativity on the lender side, you're be able to be that flexible and creative as well. Yeah.
And it was nice to be able to work with other credit unions. And as a lender, I think we're chasing, because not only does Orlando have to be really good, but the lender has to support my efforts, right? I'm just as good as they are. So I've worked for a lot of banks and credit unions, just trying to find who's going to complement me well. And I found they're all really different. So calling me as a resource, you're almost calling 10 different credit unions and banks, because all my friends work at other credit unions. My managers are still good friends of mine. So if it's not something that fits me, I already know of other credit unions that it might fit. So I'm a good resource in that sense. And yes, as you said, Manny, the reason I'm here, Logix is a great credit union, Financial Partners, they're great credit unions, but none of them were conditioned to these type of loans like this one because of that weird long time relationship that they have with these brokers in Beverly Hills. Like, credit unions don't do that. They don't work with brokers. We still do to this day, and they send us a ton of business that are unique. So that's why I work here, because I'm in this unique position to also take advantage and help a lot of people that are good clients. They're just don't fit the normal box.
Yeah. Thank you. What other questions do you have for Orlando? Anyone? And if you don't mind, Orlando, just type in on the chat for everybody your best contact info, email, cell phone. I put once again your LinkedIn information so people can connect directly.
Orlando, I came in late. What's your last name?
Duque, Orlando Duque.
How do you spell it?
So,
D-U-K-E?
D-U-Q-U-E.
I'm sorry, what? One at a time, boys. Okay,
it's
Orlando, you're up.
So D-U-Q-U-E.
Joe, once
Got
again, click on the link.
Yeah.
There's a link on the chat. It's called LinkedIn. Click on it. It's gonna do you good.
Okay.
And if
Thank
I
you.
can end with just one more comment, Manny,
Yeah,
I'll
please.
make it super fast. What's unique about credit unions is, and for obvious reasons, right? You get a lead. Sorry, someone's calling you to do business with you. Banks don't want you to like be able to see their rates online. They want you to call and be sold and, you know, get that person to apply. Credit unions don't do that. So I want to share, it's premieramerica.com is the credit union website if you guys need anything, but specifically to find my info, my email, my cell phone, a little bit more about me and my rates, my loan officer system where you can go in and check my rates any day. It's just premieramerica.com/Orlando, which I'm going to share in the group. But I wanted to say that out loud so that if you don't have the text or you didn't write it down, you didn't save it on your phone, just premieramerica.com/ my first name, Orlando, like Florida. You'll find everything about me and access to my rate calculators. And if a client wants to get pre-approved on a Sunday and they want to go in and apply there, by the end of the application, the pre-approval letter will be available right away. So it's a website that has everything about me. So I'm going to share that with you guys as well as all my info.
What percentage of your deals are commercial real estate, either apartment buildings or shopping centers?
We do about 300 million in commercial portfolio a year. So
how do you break that down between shopping centers and apartment buildings?
I don't have that info on hand, but what I could do is I could follow up with you. I know we do both. I mean, we don't specialize in one or the other because those deals or brokers like yourself come to us and present those deals, but we don't have a preference. We're pretty open to as long as it's a good deal.
Mm-hmm.
Thank you, Joe.
Right. Thank you, guys. Orlando, pleasure. Good to have you. Thank you for being a great resource in sharing with us that insight and the goodies. Put information once again in the chat. You're welcome to stay. We're gonna talk about the market and some other things that people might have to share.
Yeah,
Michael
thank you.
𝐑𝐞𝐚𝐡. Thanks, Orlando. Michael 𝐑𝐞𝐚𝐡, how have you been?
Mikey, how you doing?
Hey guys.
What's up, big hitter?
What's up, y'all? Just putting together this listing presentation, man. KW Commercial has shit resources when it comes to this stuff.
Have you used Build Out?
Oh yeah, there's nothing there. I went in.
Build Out is good. You know, Build Out is not that user friendly, but once you learn how to use it, it's really good. I like it personally.
It's good when you have the copy already, but when you don't have the copy and you're like accumulating stats on the company and KW Commercial and how like it pans out versus IPA or Marcus Millichap or Colliers, if you don't have the copy, it's great templates, but when you need that copy, it's like you're scrambling from all these resources.
You know what, Michael? I think NAI Capital uses it. I think Cushman and Wakefield uses it. What you can do with Build Out, because I did one recently, with Build Out, you have the ability to upload your own PDF. And I'm sure KW has some resource where they can doctor up a description of KW Commercial that you can upload to it. It's been useful for me. I mean, but you know, in the long run, whenever I've done a listing presentation, the first thing they do is, where's the page that tells me what you think it's worth? And they go right to that. But I think with the comps, you're going to have the comps there and the financial analysis page. But most people just want to know which page is the price on. You know, then they look at the rest.
So what I'm doing now is I hired a branding company and I paid them like 10 grand basically to build out the brand, right? And put out the image and build out what that image looks like as a group. And they're designing the whole package, but my job and my team's job is to go and find all the different details on KW Commercial and send it to them. And it's just been a little bit of you know, trying to you know, reaching out and trying to find those things and use those things and, you know, twist it a little bit and then comparing it to the other brokerages. And it's been a little challenging, but what about
CoStar?
CoStar,
do a search in CoStar, because I know you work different areas. You did that deal in Temple City, that one in Tennessee. So it's not like you're just
Exactly.
Sherman Oaks or Studio City. So you need a more generic one. But I know years ago when I was doing a lot of business in Sherman Oaks and Studio City, I did a search on, I'm going back 10 years, or maybe even longer. I did a search in Sherman Oaks, Studio City, who was doing the most business. And the company I was with at the time was doing the most business. It was Remax Commercial. But that was like 15 years ago when Marcus and Millichap wasn't as built up as they are now. And we actually did more deals in that area than Marcus and Millichap. It's tedious. You got to go in and pick out certain areas, but you're unfortunately, because you're doing, it's nice you're doing a lot of deals, but you're doing them all over the country. So it's hard to funnel that into so you need a more general approach, I think.
I know.
In my opinion, I mean, I'm no expert on marketing, but I think if what you're trying to accomplish is to project the image of KW Commercial, and you deal across the country,
You're trying to put KW Commercial into an institutional spotlight.
Yeah.
And it's a little bit of a challenge trying to paint that image, when you look at some of the other brokerages.
That's why.
Hey, Mike, I'm going to send you a link to an old commercial for KW Commercial that I've used. I'm working on a commercial right now for YouTube. I'll send it to you. There's some great content in there.
Please.
It's national brand, looks powerful. I know that my Hallie is working on it right now for the current version. So I'll send that over to you. And then when we get the other one, you can use that too. Whatever you need, I can find you some content to blast your stuff everywhere.
Because I went to Bruce's team, and Bruce's team was like, go to Build Out. So I went to Build Out and I went through there and I'm like, there's nothing here I can use. I reached out to Sam Hasty's group and he's like the head of KW Commercial nationally, or used to be. And they sent me this monthly member update. And I'm
you want facts to get you in the door, right? Well,
yeah, I'm comparing us against, IPA, CBRE, JLLs, Eastills, Colliers. And I'm trying to find it not from like a regional perspective, but from a national perspective. And it's just a little bit of like, oh, let me see if I can find it here or there or here. Because I think we all need to be projecting the brand a little bit more. Just the resources to find those kind of pieces of data suck.
You know what, Michael? Have you ever put together a list of your sales, the prices? Oh, yeah. And has anybody done a professional biography of you or resume of you?
So we're doing that now. We're piecing it together.
That's a good start. But I think when you're in my estimation, whenever I've gone into a listing presentation, and you don't do that many face-to-face listing presentations now, but I try to whenever I can, because whenever you're face-to-face with somebody, you're going to get a much better